What is up, guys? It's your boy GRC. I'm live every single day at 11 a.m. Eastern at my crib with my bros, Sam Stolt, Bullish Ox, every day, crypto in the morning, 11 a.m. Eastern, guys. It's been nothing but chaos for GRC learning about all these United States Democratic fraud. It's fun. It's been fun to watch, like the 10th dude and that's funding the Democratic Party get completely nuked because they're just criminal organization is what SBF really was involved in. And he was laundering money to who else? But we're not going to get too much into that. We're going to talk more about the markets. We're going to talk more about the GBTC premium. Richard Hart's always mentioning the GBTC premium. No one listens, but I'd be paying attention on that a little bit because now they're saying Genesis, which just halted all withdrawals, $2.4 billion, has a boatload of Ethereum and GBTC. So guys, this is very interesting stuff. We're going to play some videos. We're going to get all the live breaking news. Me and Sam are going to talk through this and we're going to say, what are we doing? I am not a financial advisor, but I'm putting USDC in my MetaMask. So be ready, guys. V-shaped bottom is what we can pray for, but you never know. So you got to understand volatility risk on the downside can get really crazy. You never know what these guys own. They're crazy. Crypto in the morning, guys. Make sure you retweet the tweet. I'm going to pop it below while the song's going on. You guys are the goats.
You already know what time it is. Crypto in the morning. Crypto in the morning. Crypto in the morning. Waiting on phone. Crypto in the morning. 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 Waiting on phone. Crypto in the morning. Crypto in the morning. Smoking a blunt on my way to the gym. 11 a.m. and I'm already tuned in. Got me some hacks and I'm making a stake. Got me some heads on, I'm making it rain. Pay me some maxi and that just in case. Jim Reddit sent me to show you the way. DeFi Pro, yeah. Crypto in the morning. 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 Crypto in the morning.
Oh man, this is exactly what we've been waiting for, utter chaos and mayhem in the crypto markets, right? The thing that a lot of people have been looking at, the grayscale, right, relative to what it's actually selling for. Also in this Genesis, right, what we're going to get into, they stopped their lending, right? What do we know about lending in crypto? It is super effing dangerous, like not something you should be doing. We're so close, if not in the like point of death, like at the bottom of the bear market. We're so close.
Ethereum broke some downward resistance. That's personally, I was waiting to see if it would. So yeah, it's looking like downward pressure is coming. I can't imagine not. This isn't a mainstream news channel, guys. We're not gonna, it doesn't really matter. So you don't have to think of it as like a narrative. The narrative is that everyone should take their money out of crypto right now. That is the narrative.
And then when that's the narrative, you have to be cognizant enough to understand you flip that. So like when everybody is doing that thing, that's the most opportune time to start buying. When everybody's like, real estate's dying, real estate's horrible, real estate's garbage, right? Back in 2009, I know somebody who was buying who helps us out on the fucking channel. His name is Bullish, right? When everybody else is going in the
I bought real estate for no reason other than I wanted a house. And my interest rate is 2.5%. A lot of guys sneak into the market without even understanding what's going on too. Like I didn't care about real estate. I was looking for a spot, and I found a cool house, but it's virtually free compared to my house is virtually free because they've done so much printing on the press since I bought this house almost immediately, just a timing thing.
Also on like slight tangent on the real estate stuff, but like when you have debt cost of 2.5%, meaning your interest rate on your debt is 2.5%, and inflation is 10%, 7.5%, whatever you want to call it to be, that means that you actually make money because your debt that you have to pay back in the future at 2.5% is going to be worth less in the future. And it's at a fixed rate versus how much inflation is. So debt during inflationary times helps out the people who hold the debt. The people who are like, if he's paying me, it's bad for me, but it's good for GRC. But go ahead.
Is Richard really in the Twitter Spaces right now? Because if it was anything like his last one, I would like to listen to it. It was really good, and if that's true, I would like to pull that up while me and Sam commentate and talk about some of these things. I'm going to read this real quick. Bullish, if you're there, you don't obviously. If you can hear me, just let me know.
I got it. I'm pulling it up.
Great.
Cool.
Thanks. In the wake of the recent events, our investors should know that the safety and security of the holdings underlying Grayscale digital asset products are unaffected. Today, Genesis Global Capital, the subsidiary of Grayscale affiliates Genesis Global Trading, announced that it's temporarily suspending redemptions and new loan or originations. Genesis Global Capital is not a counterparty or service provider for Grayscale products as a result. And guys, remember the time on this. This is 2 hours ago. So after this, then Genesis went and said, we are halting withdrawals. So that was the large player that we were talking about, I think. Grayscale products continue to operate in business as usual, and recent events have no impact on product operation, but not price. The assets underlying GBTC and all Grayscale products remain safe and secure, held on segregated wallets and deep cold storage by our custodians, Coinbase. Grayscale does not borrow. Anyway, Sam, I don't.
Why that point number 2? Read point number 2 again.
The underlying
Fun
assets.
fact, man. I've got a yield generating product that's been in business for 3 years. It's perfect flawless operation, and the price went up 10,000x, and it's only down 95%, while everything else is down 75 and 85.
So really
I've been quiet about it, but like, nobody talks about it.
From the Bahamas, the Bahamas office of the Prime Minister says the Bahamas did not have sole oversight of FTX's worldwide operation, have given directions that proceedings and investigations are to be of the highest order. Office of Bahamas Prime Minister says, based on understanding of the FTX crisis to date, we have not identified any deficiencies in our regulatory framework that could have avoided this.
Everybody's going to punt the ball to someone else, right? You can see how people are running away from any responsibility for anything. I don't think that that's unexpected.
Well, let's just
I
be honest.
think this is going to be another thing.
Guys,
oh, sorry, Ken.
Let's just be honest. I think we are all on the same page when we say that Russia did this.
I think this is going to be another thing, which is transparency of organizational charts and what entities does what. So one of the things we had to do in our terms and conditions was actually publish which entity the shares are with, which entity operates the platform. And so I think this is going to be another thing. You would expect that as traditional due diligence if you were investing into a company. But now I think we're getting at the level of ultra transparency where organizational charts and what the entities do is going to be in the terms and conditions. And I suggest this would be one for people would be very curious about with Binance as well.
Here's a question for you. Why doesn't this take 10 years like Gox did?
So that was in the Japanese court, and then it went into bankruptcy, and then it came out of bankruptcy because the dollar value of Bitcoin put it into a new process called civil rehabilitation, which was then subject to all of the legal disputes where every time you were about to pay out clients, some dickhead that said, I created Mt. Gox US and you owe me $15 billion could hold up the whole process.
Yeah, so I guess if you don't resolve it before Bitcoin's next pump in 3 or 4 years, then you get that same problem.
Yeah, they're in chapter 11. I'd expect it to go to, if there's criminality, it would go to chapter 7. And there's not many assets to liquidate like Mt. Gox because all of the Bitcoin's been hacked probably. So I'd expect it to probably be a 2-year process rather than the whole Mt. Gox thing.
And a 2-year process where you're effectively saying that people get nothing in the end.
Well, it all depends upon what Alameda did with the assets. So they may have invested in a bunch of private equity, and they may have just been, Solana-based companies and NFTs and things like that. So if that's all marked to zero, then the value's gone. I talked about it earlier, but I'll repeat it here. The key issue that I think is going to come up in this one is that essentially client funds were used by Alameda. And Alameda, really, the creditors in Alameda are probably going to be hedge funds and sophisticated financial institutions. And the creditors in FTX are going to be retail plus all the sophisticated financial institutions. So it depends whether those hedge funds have more exposure on the Alameda side versus the FTX.com side. So what I think is going to happen is bankruptcy proceeding is more likely to favor unsecured creditors if and only if you can demonstrate that actually the hedge funds were using the proceeds of crime because client money was not meant to be used. Now, here's the key difference with Celsius. They just simply didn't have, they illegally operated a hedge fund and a fractional reserve bank. Because they illegally did that, the ambiguity of Celsius claiming, so Kirkland and Ellis, the legal team, claimed that all deposits were actually the property of Celsius, and they changed the terms and conditions to reflect the fact that the previous CEO was essentially playing hedge fund manager and VC with client money. With the difference here is that because it was actually a regulated institution in Bahamas, that means that regulations define client money legally, and therefore client money was actually used. And therefore, if client money was used, you could argue that the hedge funds in Alameda were the beneficiaries when they took out their loans or collateral of the proceeds of crime, which then would be the unsecured creditors in FTX.com, which would be more retail. So I think this is going to be hedge funds versus retail. And I think we need to ensure that the depositors and creditors at the FTX.com side are the ones that win the argument. And I think, not a lawyer, but I think the proceeds of crime would be the defense there.
Richard, I think
I'm more
right.
concerned.
It's going to take a while.
I'm more concerned with so if you resolve all of these bankruptcies and you distribute what's left amongst the creditors, they're not guaranteed to sell. It's not 100% sell. But we've got some other big coin amounts out there that I'm pretty sure are 100% sell. So when the Department of Justice seized $1 billion worth of Bitcoin from the Silk Road hacker last week, that's a sell. They're going to sell that. They're not going to sit on that. That's a guaranteed sell. So I don't know how many billions, and then I don't know whether they're going to give the Finex hackers, the other Finex hacker. Well, sorry. The Silk Road hacker was the one earlier this week. The Finex hacker was maybe 6 months ago, and they got, I don't know, 100,000 coins? I don't even remember what the number was.
Yeah,
so a couple billion.
119,000 Bitcoin, and then I think there was only probably 100,000 or something retrieved.
Yeah, so there's
the Mt. Gox
150K.
one was 200,000 Bitcoin of 800 because Mark Capellas found a private key under his mattress.
Yeah, I think Gox has got 140 left, 140K, and then you told me that Finex is at 100, and then this guy they just got was like 52K. So that's like what, 270 or something?
Yeah, and then Celsius essentially invested all the Bitcoin in a Bitcoin mining operation, and then they're left with about 30% of it, and a bunch of it was in WBTC, which interestingly they sent over to FTX, which may be subject to a preference, because I think they tried to get the WBTC into BTC. I got to remind myself of that. It was quite a while ago.
Right.
And then there's the Voyager ones as well.
I'm trying to figure out how much actual market sells are going to happen. So all these bankruptcies, those aren't market sells, but the DOJ is going to be a market sell or an auction at least.
Yeah. So the Silk Road ones were auctioned off to VCs. The Japanese civil rehabilitation, they did actually market sell and cause a crash, which was just dumb. They got rid of all the Bitcoin Cash because that happened halfway through they only got rid of some of it. They're still sitting
really?
on.
Yeah, they sold equal amounts to the BTC and the BCH.
Yeah.
So they're still sitting on 120,000 BCH as well.
Yeah, so Richard, unfortunately, we do have these centralizing effects. So in the case of the Bitfinex hack recovery, those Bitcoins are actually the property of those that had the recovery right token, which was part of the recovery plan we did in 2016.
I know that everyone wants that to be the case, but I heard the DOJ is trying to just jack them. I heard they've been filing paperwork to just steal them for themselves.
Well, there you go. There's a case there, but then there's also the Leo token holders, which was a result of the Tether crypto capital hole.
Yeah.
So those are I guess entitled to them by, let's say, token promise or smart contract, but then there's a legal process because the DOJ actually has them.
Yeah.
And then all of these. So the big when everyone's doing their technical analysis right now, unfortunately you can't ignore the fundamentals, that there's these big pockets, and if it goes into Chapter 7 liquidation, my belief is that it would probably be, well, it depends. If they want to be a bad actor, the DOJ could do a market sale. If they want to be a good actor, depends how many people.
Depends how many US Marshal auction.
Yeah, depends how many people in the DOJ own Bitcoin. Then they might do an auction. But if it goes into Chapter 11, then you can get a payment in kind, plus an auction process. So where securities could also be issued, because there's exemptions in the bankruptcy code, where rather than having to be a public company and be limited to the Jobs Act, which is 2,000 investors, you could actually issue these shares, which is what we're fighting for in the Celsius case at the moment, because essentially Alex just went out and played VC, invested in a bunch of private equity mining companies, self-custody companies.
He did some FOMO tarding as well.
Yeah,
he did straight up.
The interesting thing, if we get this outcome right, we could end up with so think about this. So you've got, at the moment, you've got the VCs, but if the retail win these cases and we get to distribute all of these shares and assets to 5 million people, we could end up redistributing and decentralizing the equity in many of these companies. That might be a really interesting turn of events.
I got a good one for you. Here's a fun thought experiment. GBTC is like half off of spot BTC. Ready for this one? Roll up the trust, liquidate it, and sell all the coins. I think they've got 350,000 Bitcoin, 320,000, something like that.
They had 100 million.
Yeah, no, GBTC. Again, nothing surprises me now, but I'm pretty sure that was, operating fully segregated, and it wouldn't be mixed in with if you had a segregated crypto lending company. I don't think you could come after the backing of a trust. Look at the trust structure. So
yeah, but look at the math this way. Okay, right now the market price for your entire GBTC enterprise is worth literally half of its assets. So in a I don't know whether leveraged buyout is the right word or whether hostile takeover is the right word, but anyone could arbitrage that difference by giving them a 20% bonus on what the market's currently giving them. So like this is what Elon did with Twitter. So you offer the GBTC guys a 20% bonus over what the market is currently offering, which is half off of their book value. And then you give them the money, you get the coins, and then you dump the coins in market and make the difference.
Yeah,
it seems like straight up normal economics.
Yeah, if any of those go into the Chapter 11 process, you could use the auction to do a community LBO and execute something like that. These are all the I know that we're thinking about tragedy right now, but the free market solutions that can come from this, rather than having the government bailout, I think there's a lot of, that's definitely an interesting idea that in theory could actually happen.
Well, I want to know what the likelihood is of their coins dumping. Like so basically normal Bitcoin cycle, 85% dump. No one ever believes it when it comes, but it comes every 4 years. And now I'm just wondering how much extra downside there might be above and beyond 85 due to this hidden leverage, hidden FOMO tards getting liquidated, the cost of the dollar going up for once in 20 years. things like that?
It's basically from here, it's an industry lobbying effort. The institution is going to be, if all of these companies go into Chapter 11, then you essentially have, Chapter 11 is a protection process to protect them from lawsuits. And then you have the DOJ that engages the US trustee. And the US trustee, if they think there's too much criminality or it's not moving in the right direction, then they can compulsory take over. That's very rare that would happen. But essentially, the end decision of this is the investment banks that these companies engage in order to go through the bidding process, who ends up buying those companies, and whether we can actually distribute the assets to creditors rather than a predator coming along and buying up the whole industry, or the US trustee just saying, right, we want to have a big systemic effect on this industry, which would be harmful to creditors, and then they could take it into Chapter 7 and try and liquidate, market, sell. Those are threats to the short term.
Simon
pricing.
and Richard, I have a big question, because I think this is important also. I mean, there's two things here. The first one is, ideally, what you would like to see is everybody pulling out of all of the exchanges just to stress test them and shit test them. And then those who are still alive mean that they already are working okay. And then learn the lesson of history, saying, okay, I'm going to treat the market like a whore, in and out when I want to trade, but my big treasury, I'll keep it on my keys. It's my keys, so I keep it outside. Ideally, that's the way I see things.
I think you permanently replace all the centralized crap with DeFi.
Yeah,
you can bridge
sure,
Bitcoin to Ethereum.
Here's the point that I'm trying to make. Is like there's 2 points here. The first one is, if you do that, and then you do that on the traditional market, then it would be a catastrophe. Whereas in the crypto market, you could still survive theoretically. So that's the big risk I think the regulators are looking at, because if people are saying, okay, pull your money out of the exchange, but then by the same token, pun intended, you should also pull your money out of the banks, then everybody's toast, right?
Hey, Kim, can I just make one point there? So the reason why I don't think this is a good idea to be promoting is because
let me finish. The thing is, the problem with that also, and why it's not a good idea, is because if you start removing the liquidity from the pools, if you start removing the liquidity from those staking things, you will know that subsequently you will have another token drop, because those pools have tokens as well. Let's imagine everybody pulls their money out of Uniswaps or the pools. The Uni tokens are going to tank, and then people are going to lose a lot of money, and then it will just unfold a domino effect onto the entire bloody ecosystem. So
that's not how it works.
The
Uni token has no relationship to actual Uni trading. It was a duct taped on crap coin that has no relation to the actual project at all. The Uni token.
When you get the yield from the transactions, obviously, if you don't.
Yeah, but the yield goes up the less people that are participating in the pool. So it's self-balancing. So the less people are competing you as liquidity providers, the higher yield that you'll earn, because you'll be sharing the fees across a smaller pool of people. What you have to understand is that exchanges serve very few.
Swap to him? Is that what just happened in slow motion? You just explained a swap to him?
No, liquidity providing ding dong.
No, I'm explaining that liquidity
from the protocol as well, though.
Liquidity providers split the revenue of swaps in a pair, and they split it by their portion of total LP. And it's more advanced in Uniswap v3, where you can choose to participate in certain ranges and not other ranges. Uniswap v2 did not offer that. You had to provide full liquidity across all ranges, whereas Uniswap v3 is theoretically more capital efficient because you can centralize it in more reasonable ranges and not have to provide liquidity in the middle of nowhere where everyone touches it. So what I'm saying is, an ideal like everyone pull their LP from Uniswap isn't as compelling as you might think, because it would counterbalance your effort to defund the LP with increased yield, because the fees are 0.3%. Well, you can choose, but they're usually 0.3%, unless you're on a stablecoin pair, which is 0.1%. So on those 0.3% pairs, if there's $100 million of volume a day, the fees per day is $100 million times 0.3%, and that gets spread across the LPs in that range. And so if you try to get people to pull their LP, it's going to.
Like, thanks for explaining that, because it's important, right? I mean, there's things I don't know, but I have a question. And in this case, like, wouldn't it be the case that if the yield all of a sudden reaches something like 10% on a spread, people will not be incentivized to trade anymore, and the entire thing will die off?
No, the spreads never change. So in Uniswap, the spreads never change. So basically your spread is the fee, which is funny. So it's not a traditional CLOB central limit order book. It's a constant product automated market maker, but it's not really a constant product anymore, because
between the different pools, like if you have a ETH Tether, right, and then you have a big Tether pool, you have a
I can tell you the day before yesterday, the largest traded volume USDC to Ethereum in the world was Uniswap. And if the world would just stop trying to use exchanges, they would find that you have thicker order books, better order execution, lower fees. So if you go on exchange, okay, they're going to charge you 0.5% to do trades very often.
They can front run, whereas Uniswap, it's mathematical.
And they can spoof and do a lot of other stuff. Now look, you can say they can do minor extracted value, but like I'm telling you as a person that's pretty much expert on Uniswap, made it popular, carried it on my back, that Uniswap is a far better solution for your trading and has far more coins available to you, and you can place limit orders on it, and you can use oneinch.io if you're not in the United States, or you can use matcha.xyz, and it will spread your orders across all the available liquidity, and you can place limit orders, and you can place trades without gas fees. Like, you can literally just like have someone else pay the gas fee. You'll end up paying it.
If everybody pulls out the money from the exchanges, and
that would be better for everyone in the world. Except the margin trading degenerate scum who lose all their money. And it would be great if the only function these centralized entities play is to rob you of your privacy, rob you of your when they leak their database to everyone, or go bankrupt and give your data to the government, or answer subpoenas that the government gives them that are phishing expeditions, or the insiders that work there give away your selfies to everyone. Even Binance was hacked for $50 million. These people are the enemy.
But when you look at the market makers and the pools, right? If you have a disbalanced pool, let's say you have a pool of ETH and a pool of Tether, and the pool of Tether is much bigger than the pool of ETH, but yet, for some reason, all of the Tether holders want to get out because, let's say things are unfolding badly, right? And then how you get to liquidate the pool of Tether versus ETH in this case without damaging the kind of like the ecosystem itself,
Well, it all auto balances. The price just moves. So for instance, the person that emptied the FTX accounts, who's labeled an Etherscan as the FTX account drainer, that guy just yesterday or the day before market bought $50 million of Ethereum that used to be USDC. Now, probably he didn't want to have USDC come in and validate his coins real quick. So he probably wanted to get out of that counterparty risk and get into Ethereum, which has less counterparty risk. And it worked fine for him. So unless any of you on the call have 50 million in your pocket that you don't want to just market buy at once, he did it like across 8 transactions, about 10,000 Ethereum each, some that were smaller. If it's good enough for the FTX account drainer, isn't it good enough for everyone else on the call, guys? It's great. No counterparty risk.
Rich, I have a question for Richard. What about the 97%? I have a question for Richard. What about the 97% of tokens that are scams on Uniswap? Is that a great idea for the world? Is that the great idea to shift the world to DeFi, literally like alienated probably 30 to 40% of the world? I'm just wondering, because this sounds like a very tribalistic approach.
Yeah, what I do is I try to not promote scams. So I don't talk about or promote things like Celsius or BlockFi or FTX or margin trading. And so I'm a good person that doesn't victimize my users. I save my users. And I also realize the solution to saving my users isn't censorship. And it's not making it so there's a centralized party that chooses who's allowed to make a coin and who's not. So in order for capitalism to work, you must allow competition. And then you have trusted parties, people that are considered experts that decide, hey, look, maybe you don't want to get into this coin that shows red flags everywhere with admin keys, and you can buy it, but you can never sell it. And the front end isn't decentralized. And the front end also tries to steal all your keys and give you to authorize your ETH for spending. And then a proxy changes the contract and empties all your ETH out of your account. There's a million ways to lose all your money in crypto, but people still promote the heck out of it. I'll tell you, people lost more money.
But the point Alex is making, though, is that Uniswap, as a non-centralized entity, there's no centralized party to prevent.
It's the Wild West, Mario. It's literally like Total Recall. It's like, it's the future. I agree with 100%, Rich. It is the future. But right now, it's the Wild West. And literally, I know degens who've been in this game forever, and they're still getting spoofed. They're still ended up clicking on a link, which is literally Binance with a extra dot or a Binance.io instead of .com, and they get literally spoofed. So what about the average Joe who's not tech savvy?
Let's do a comparison real quick. FTT was listed everywhere. Scam. Yams was listed everywhere. Sushi was listed everywhere. And then the dev exit scammed, but then magically they came back. Okay. Hex is listed nowhere. So Hex, the thing that works perfectly flawlessly for 3 years and was given away for free and went up 1,000,000%, it's listed fucking nowhere. But the scams are listed everywhere, including the front page of CNC, where Hex isn't. So I can tell you for a fact, the things that would have saved everyone are hidden from them, and the scams that robbed them are shoved down their throat and on sports jerseys. So you'll see, if you go to eToro.com, right at the top, 67% of users lose money with us at the top of the site. And then you see their banners and all the sports players running around. Hey, look, all our users are getting scammed, but we're allowed to advertise. But real DeFi, right? Not allowed to advertise. Banned. Can't advertise it. The world is not fair. It's a disgusting, horrible place. And the only way to solve that is for the people that were right to be listened to and the people that were wrong to be ignored and punished and censured. And I see a lot of people that used to promote, for instance, Gemini. Gemini promoted a fucking scam. They promoted the thing that just stopped letting you get your money. They should eat shit for that. Period.
I'm with you, Rich. I'm with you.
Scam.
I'm with you. And maybe it is unfair that people don't list Hex. But what I'm saying is on the centralized exchanges, these are not scams. They could simply be failures, right? There's no exchange. If you go to Coinbase, never you'll see 97% of tokens scams. They're failures, obviously.
Even if you go to FTX, you go to the projects listed on FTX versus any 10 random projects on Uniswap versus 10 random projects on FTX. Uniswap is much more likely to have a scam project there because there's no one in that project.
Guys, pro tip, there's no way for noobs to even know what's listed there, okay? Someone has to feed the noobs to the meat grinder. The noobs are being fed to the meat grinder, not by Uniswap, the technology, not by Uniswap, the website, by scumbag shilling and by coin ranking sites. Scumbag coin ranking sites like CoinGecko and CoinMarketCap are where the noobs get fed to these scams. That's where the noobs get introduced.
I agree with Richard on that. I mean, in the end, that's the job of the market to decide, and by trial and error to purge every now and then. But I
go to uniswap.org and tell me what new listings.
Yeah, but it's also the job. It's also the job of the market to distinguish between centralized and decentralized, and there is onboarding and offboarding. And Richard is totally right that people should understand, but people will progress through a user experience as you offboard from fiat, and if you get wrecked with these experiences,
there's only one thing it can do.
But you can't get rid of centralized. It will exist. And
you can.
You
can get rid of it.
But
you can make it fucking illegal.
You have to make it illegal, and then you're using government enforcement and removal of. You're using the philosophy you're fighting in order to enforce your map.
Yeah, but is it healthy for people to go 100x, bro? And you can't 100x in DeFi. You can't, but you can in centralized trash.
Yeah, but there's a difference between this is like the difference between communism and capitalism, right? You're saying you shouldn't do this and therefore it should be illegal versus
I'm not saying we got to make it illegal, but it should be on everyone's tongues like it's been mine for 5 years. Yeah. I've been singing the same song for 5 years with no changes.
Yeah, you should be doing what you're doing, which is shouting as loud as possible for people to try and follow your philosophy.
Yeah, get out. Get out. Do not trade. Get out of centralized exchanges. The only thing DeFi can't solve is the fiat on ramp crap and the margin trading with extra insane stupid leverage because you have to over collateralize in DeFi.
And the case of like a stock market having to go through additional rules and regulations in order
something that just crossed the wires here. Market maker B2C2 offers to buy loans from Genesis's crypto lending unit. Also have just a couple things from the Bank of England Governor Bailey. He says he does not detect a systemic fallout in the United Kingdom from the FTX collapse. And said for 4 years, he has said there is no intrinsic value in unbacked crypto. But the big thing also to here being B2C2 is now offering to buy loans from Genesis Crypto Lending Unit.
Just to finish off the topic on DeFi versus DeFi, guys.
There's no value in what? Sorry, I missed that.
If I could just share one last thing, when it comes to comparing CeFi and DeFi, it is not true that Uniswap is superior to all centralized exchanges when it comes to execution technology. High frequency trading can trade 164 millionth a second in terms of trading. So the technology is definitely not there in terms of the trading speed and promising and getting the right quotes in terms of slippage and spread. So that is false information. But I just really want to make sure that, we're speaking from a point of love, guys. We're already fucking hurting. Everyone has lost their money. We're not here to be divided. We're here to be united. We're not here to be egotistical. We're here to be altruistic and inclusive. And I think it's really important that in these times, we should not be divided, guys. We should just all love each other, even though we understand the differences. But
I think we need to push back on it.
No.
To Richard's point, the reason people are wrecked and hurting right now are because a lot of these CeFi lenders and exchanges basically trying to skew the actual playing field by promising yield that they can't actually generate. Whereas Richard's point,
true.
Listen to how stupid what he just said was, okay? What normal human being needs to trade in a 64 millionth of a second? Absolutely none. So he just talked about a feature that's useless to absolutely no one on the planet except someone that's wrecking retail, right? And then explains it like it's better. It's not better, okay? Go to whatever exchange you're trading on. You go to whatever. Listen, I'm pretty sure I've traded more than you, okay, buddy? Go to whatever exchange that you trade on right now, and you go type a market sell for $1 million of Ethereum.
Let's compare in real time, Richard. Go find your DEX. I'll find my execution.
Sure.
Let's compare
I'm
from the
going to
community.
1inch.io. I'm grabbing my other phone. I'm going to 1inch.io.
But to Richard's point, I think the thing is, you can already do that type of trading with other assets. The reason that crypto was launched in the first place was to be a decentralized or permissionless system that's an alternative to the financial banking system. So I agree with Richard. Like, you can already trade other assets.
Don't stop the dick swinging. I want to hear that. I'm sorry. I'm going to interrupt. There was dick swinging going on, and it's a perfect time for some funnery. Richard, continue. Who are you vying against? I want to hear the volume. Go.
So I'm just saying, look, we're talking about technology. I'm talking about order slippage. This is math. This is facts. It's got nothing to do with PPs.
No,
if you go to right now, 1inch.io.
1inch.io, which is hilarious. You just said people. But no, I want to hear. I want to hear. I was promoting this. Go.
Yeah, I'm on the website, bro. I'm typing numbers. Give me a second. Okay, so I can turn 1,000 ETH into let's go with USDC here. My slippage on turning 1,000 ETH into USDC gets me $1.2 million. It's 0.11% slip. 0.1% slip. So I can turn 1,000 ETH into 1.198826 USDC right now. Now you go to your exchange and tell me what you get for 1,000 ETH order execution. Or we'll go 10,000 ETH.
I'm going to make a video for you, Rich. I'm going to make a video for you so we can post it online and we can take this offline. Yeah.
So I'm telling you, for 10,000 ETH market buy right now on 1inch, I'm getting 11,932,000, just updated, 11,933,675 USDC. That's 0.58% slippage, including all the fees, including all the slippage, all the fees, everything. As a normal user on a normal exchange, you get 0.5%, not even including the slippage, not even including the bid-ask spread. It's the thickest order book for ETH USDC in the world, basically. You're going to get the best order execution possible. You can't get a better deal. And if you want an even better deal, you can use limit orders on here and get filled with no slippage at all, and without even paying gas fees. So like it's vastly superior. And I don't know why anyone would want to remove their privacy, de-anonymize themselves, have more slippage, have more beg the exchange for getting your money back. Hey, I just did $1 million trade. Can I please get my money back? Please, God. Oh, your website went down, and now I can't even get my records for accounting anymore. Oh, I guess I'm really screwed now. So like it's just vastly superior.
Speed versus start. I think people forget the most important thing, which is cost, and speed is an inverse of safety. And by the way,
no one cares about speed.
That's what I'm saying. And just to point out one thing, how many people on this stage lost a ton of money on exchanges. Who is actually here holding money on centralized
I
exchanges?
can't. Just so everyone knows, Fox News Channel is currently covering us live on TV.
Oh,
Yeah.
we're currently live on TV, are we?
If you've never used
Hello?
Uniswap,
No
you
one
need to
watches
use
TV.
Uniswap. It's the
Fox
future.
viewers,
Sorry, they're
Fox
playing
viewers,
us or
don't vote for Trump.
So
No
if they're
Trump
listening, are we going to
2024.
tell people to pull their money out of the bank and then destroy the entire system?
No, you can't. Look, man, that's what Jeff Bezos just told everyone to do. Jeff Bezos just told everyone yesterday that there's going to be a recession, and I'm pretty sure he knows. I'm pretty sure he does a lot of shipping. I think he knows what the state of the economy is. And his suggestion to businesses was, don't invest in risky things like new equipment. Save your money to survive. And that was his advice to the economy, was save your money. Now, look, Jeff Bezos might be one of the only dudes that I would say would be smarter than me. And if he's saying to save your money and to not take risks, it's probably good advice.
I don't know. It's probably better than listening to some beggar on the street. That's for sure.
cool. So I think we've done this topic. What is there any breaking news?
So just no breaking news, but what's just fascinating is that literally Fox News. So Chet was recording it. They covered our segment yesterday on Hunter Biden, so they put us on the front page, and now they put us live on Fox. It's,
I just can't.
Topic they covered?
I can't believe in this space that when everyone just got wrecked on centralized finance, that anyone would be like, "Yo, the orders are faster." You're just like, dude.
But it's important. But it's important not to forget.
Let me cover it. We have completely been saying, not your keys, not your coins, take your money off exchanges.
But this guy wasn't listening. He just came in here and said the opposite.
No, I'll just say.
Hey, one guy skewed the conversation. Let's not let that take over the entire conversation.
Your complete strength is your complete weakness as well. Like you are, your delivery style gets maximum attention, but at the same time, is completely polarizing. So it kind of turns it into a debate.
I baited him into promoting CFI. My bad.
I'm just saying that's why you always get a pushback, because at the same time
I hear you.
People.
But but Simon, I might play devil's advocate and kind of make a point on Alex's side. With Richard will hate me for this, but we can't ignore the amount of scams that happened last year in the bull market on decentralized exchanges. Like for us, for example, we invest in projects that we know are going to list on a centralized exchange. Doesn't guarantee the project is good, but it's less likely to be a scam. People invest in a project that's verified on OpenSea because it's less likely to be a scam. So people delegate the due diligence to those centralized entities because they have a job, they have a life. Yeah. So I think there's a place for centralized entities that this is what happened now is positive to decentralization. But
I tell you, it's real hard to talk about how good the blue chips are when the blue chips drop 85% and the scams only drop 100%. There ain't a real big difference between 85 and 100. They're kind of similar. So like it's when you're in an industry,
that is one of the problems with our industry is you can end up making more money out of a scam than a legitimate project. And that is, I've from being involved in this industry for since 2011, what's that, 13? Sometimes it completely defies logic, and you can literally, the right decision is often the one that costs you the most amount of money.
Crypto.com's 20% of their balance sheet is SHIB. It's real. It's like, fuck.
Well, the important part
but didn't they defend that, saying that was that? Didn't they defend that though, saying that was their user deposits? By the way, shout out to you, Richard. When I saw that, I was laughing so hard.
And Robinhood's like 50% of Robinhood's profit.
It really is true.
No, the important part about that is that
these guys do is promoting the gen coins, because people are on this market for the most part. They're on this market for speculation, and that's the truth, right? So that's just the point I'm trying to make. Ultimately, there's going to be enough shit hitting the fan, so everybody will be covered. And at some point, people are going to make the right choice and trying to find what a real alternative to
what I don't think I don't think the risk-adjusted right choice is Bitcoin. I think being down after waiting 5 years shows you that, like, you can buy this blue chip and you're going to do worse, not better. I think the math is
Yeah, but
I think
if you want to
you're
look where this is all going, just look at the traditional markets, which is the reality is the emotions of fear and greed that we're plagued by are the same emotions of fear and greed that plague the traditional markets. And in the end, everybody ends up, the vast majority, in the big pockets of money, those that are contributing to their pension, and then the pension, and they outsource the investment decision making. Because the reality of the world is, we're all sat here on Twitter Spaces. We love this industry, and we literally spend day in, day out researching every nook and cranny. But the vast majority of the world, this is just a mechanism. Investing is just a mechanism for trying to get ahead of inflation, and they have other things they care about, which is where the unfortunately it's just a fact of the world. It's why financial advisors exist. It's why the buy side and the sell side exists. Is because that's the vast majority of the world are not going to be day in, day out trying to figure out how to further their finances.
See, that's what's great about crypto, is everything is just number go up. And so if everything's number go up, you do it with less negative externalities. Uniswap runs without a big building of people. It just runs. Hex runs. Bitcoin kind of runs. You need some miners. But like it's less, it's better hours, it's better uptime, it's better security, it's better pseudo anonymity, and your numbers go up more. And so it's like, if you're not in crypto, the risk adjusted return in crypto is vastly superior than the stock market. Stocks went up threefold in 14 years. Property went up threefold in around the same time. And crypto went out like 30 million, trillion, billion X, and there's no comparison. So I would love to see crypto kill off all this stupid SoftBank and all this other crap, like people FOMO tarting stuff that can't even go up. It's all negative externalities, and half of it scams anyway. Just put all that money out of the stock market into crypto. I mean, you've got a huge dip now.
Yeah, guys, can I just mention that there seems to be a scammer out there that says buy AGAO, which is my product, AGSU. My product is not for sale for retail, guys. I'm not selling anything here. And just to let you know, we just deal with.
Have you read the library case, my friend?
What?
Have you read the library case?
What's that?
Exactly.
Yeah, cover the library case.
First of all, everybody should be very aware. First of all, did you guys see the class action against FTX US?
Nope.
A lot of fucking lawyers about to make a lot of fucking money. If you think all the money's being lost by the exchanges themselves, lawyers are going to eat the shit out of a ton of the liquidity from class actions. If one class action gets certified, consider your money going to us lawyers across the US.
Hold on.
And if you,
are you a lawyer? Can you? But isn't Chapter 11 bankruptcy?
Yes, I'm a lawyer.
And it protect class action?
Yes, I'm a lawyer, and I hate class actions.
No, I'm saying isn't Chapter 11 bankruptcy, it protects from class actions, right?
It depends on timing, and it depends again on equity. So
yeah, but
again,
what we saw in Celsius is all the lawyers came in and said, "Hey, quick, let's do class actions," and then it filed into Chapter 11, and then everyone just wasted their money.
Is that resolved yet?
Well, no, the class actions come after it's out of protection, but they just tried to race to get all the class actions in, and then
you're familiar with fraud, right?
Oh, right. Okay. So tell us that. Is that so? Will the class
fraud pierces bankruptcy?
So if it goes into Chapter 11 and all the class actions happen,
and they can prove fraud, yes, fraud pierces bankruptcy.
But when it push it into Chapter 7 liquidation, or how does that all work?
All I'm saying is bankruptcy is equitable. So yes, how it's going to unfold, let me be very clear. None of this is legal or financial advice, and I am not an expert bankruptcy attorney, but I have dealt with many bankruptcies. And at the end of the day, everybody's going to try and bite from the bag one way or the other. I just wanted to throw out one last quick thing, which was the library case talks about it does essentially. It didn't make the decision. It was a summary judgment adjudication motion that basically said even if you didn't do an ICO, that does not protect you from not being called a security. So I heard somebody saying, we don't sell our tokens on exchanges or we don't sell the public. Be careful. If your coins end up on an exchange using both UBO, which is ultimate beneficial ownership, which is how a lot of these coins are going to get smacked. If you also combine that with the Ethereum jurisdiction basis that the SEC tried recently, saying that because 42 or 43% of the Ethereum validators are in the US, that could be the basis for jurisdiction. You combine that with the library case, and if your tokens touch exchanges, period, doesn't make a difference if you got an ICO, an IDO, an IEO, an STO, or anything else you want to call hiding behind your illegal securities that you didn't register, watch out.
So when new lower lows, when price dump? I want my targets to hit already. I'm sick of waiting.
There's another question by the audience. We've got an audience member, Dewey_Wester. If we calculate the shit show we just had, what is the sum of the shit show that is just about to cascade?
I think we're in the hands of lawyers at this stage, actually. I think it's the outcome of the cases. I mean, so Gemini, Genesis, all those are like pretty big players. I think really the ones, I guess the only ones that you'd need to look out for.
We forgot about Plus Token. The Chinese government has like a couple 100,000.
Yeah, that was like 4 billion or something, wasn't it?
I forgot about those guys.
And there was one in India as well, a crazy one.
Bro, you know, at some point, I think Ethereum has to decorrelate because there's too much sell pressure on Bitcoin, and there's just not as much on Ethereum. Like, I think Ethereum will dump harder, but like when it's done dumping, you know, down to Doomville, I think it should decorrelate.
Hey,
Richard,
Gemini,
can I ask you a question?
Just shut down withdrawals, by the way.
Gemini,
Richard, can I ask you a question?
I just sent it. I'm gonna read. Hold on, I'm gonna read it out. Chet, did you see the message? I don't know if you saw it in the group about Gemini.
Yes.
If you can review it and just confirm it, and then just announce it if it's if.
Let me tell you something, and I can quickly confirm. I thought I was unmuted. Maybe I was talking to myself. Sorry. I haven't looked at it in the group yet, but something just crossed my wires. Is Binance's founder says he's looking into acquiring Genesis loan book. So that CZ is now looking into acquiring Genesis loan book, and that is according to Blockworks, citing a source familiar with the matter.
We literally heard the same thing a week ago, dude.
Can I rephrase that? Can I rephrase that? Binance is looking to acquire Gemini's licenses, not their own book.
No, Genesis. We're talking about Genesis, not Gemini.
Yeah.
Wolf?
Yeah, I just wanted to say, Simon, I'm not sure if he was talking about this class action, but the one that I saw that was put in today was against SBF himself, not against FTX, and named you know, Larry David, Tom Brady, Steph Curry, etc., which I think is largely outside of the bankruptcy protection.
So have we got any speculation on what SBF's net worth would be at the moment?
A lot more than zero.
Didn't they say 1 billion?
Well, the vast majority of his net worth was, well, who knows, but that was meant to be the value of his company and his tokens. And so the question is, how much
in the Bahamas is currently for sale for 40 million. So there you go.
So same as easy.
You're looking at buying it, Kim?
I can't travel to the Bahamas.
So
but
people tried to come after the CEO of Voyager. And I'm sure they'll do the same with Celsius, but they determined that his net worth wasn't worth the legal fees after this case.
Right,
but
they could have gone after him and basically settled as part of the UCC decision to expedite the process to not go after him. But you know, if they find that he has more assets or that he's lying about them down the road, he's still open to lawsuits.
Yeah, so Shingo, the guy that like was really on top of this, he said that a lot of his wealth was siphoned off into a trust structure, and it wasn't his personal net worth, and that actually they started looking at. So when FTX tried to buy Voyager, the holdup. Now this is really interesting thinking about it now. The holdup was because they were trying to the state regulators were disputing the fact that they were trying to get releases. So the purpose of Chapter 11 bankruptcy is for to try and get, you know, Kirkland and Ellis would try and get as many releases as possible, which is why it often ends up in an auction, because you can negotiate into the purchase agreement for the assets that you will waive some of the
the things like the criminality, well, not criminality, but some of the legal issues. And the hold up on the Voyager case was because the state regulators were objecting, and they wanted to come after the various other things, the criminality side of that. So there was a big negotiation between FTX and Voyager in terms of what releases can you have, what can't you have, and they wanted the right to come after the founder. So that actually caused a delay, and in the delay, this process, FTX actually blew up before it actually. Well, they signed the agreement, so there's some recourse there, but good luck trying to get that recourse. So they're putting it back into the auction process now.
Yeah, but Simon, I think the silver lining there, and I think a lot of people who are Voyager creditors initially were really upset that FTX blew up and that deal wasn't there. But imagine if that delay had not happened, FTX had done the deal earlier and Voyager had already sent their assets to FTX.
Absolutely,
that was the worst case scenario for Voyager creditors. So actually, as painful as it is to have the timeline, I think, reset for Voyager creditors, they should breathe a massive sigh of relief that this just didn't fall into the abyss of FTX's assets.
Exactly. Imagine if everyone suddenly jumped from one Chapter 11 to this Chapter 11 disaster. And that just shows you. That just shows you. SBF knew what was happening, and yet he was still willing to take 1 million people. He was willing to use creative financing, probably leveraged against the token that he printed, in order to bring 1 million victims into his scheme, and then they would have all been caught up in this process, all because he was trying to play creative finance from his bad debts, leveraged upon the collateral of an illiquid, illegal security called FTT.
Simon, quick question. You're calling it creative financing. Is that being generous, or is it actually illegal financing?
Yeah, it's a fraud, basically.
Fraud. It's fraud.
If
it was so client money. So but the FTX.com had client money as a regulated institution. If you touch client money, then that is certainly a fraud and criminal case at that stage.
Got another question
So
here.
I'm not a lawyer, not legal advice as well.
It goes back to the question that to the topic we're discussing. If I trust centralized exchanges more than I trust myself to keep my keys secure, that's by Hustle Life only. What do you recommend in terms of the safest centralized exchange in the market now? And he's not alone. You remember when FTX collapsed, we saw a few exchanges, including Binance, get a net inflow. So they had more money come in after the FTX collapse, at least in a few days after the collapse. Yeah. So for anyone that doesn't want to use a DEX, doesn't trust doesn't trust having the private keys of a wallet, what centralized exchanges would you recommend, if any?
Well, nobody can recommend an exchange in this side, and nobody should. I wouldn't recommend anyone.
Even if you go to a US, even if you go to a US regulated exchange like Kraken or Coinbase, you still wouldn't recommend those.
I have a question for the room.
The thing is, nobody can recommend anything at this point.
Here's
recommend something, and then the thing goes down.
So just some news to report, for everyone really quickly. Sorry, we do have some reports that there's issues with Gemini overall. Apparently, it looks like it could be an AWS server issue. It's not certain yet. And an official statement that's coming out of Gemini right now is that they're investigating reports of potential service disruptions, but they state that all customer accounts and funds remain completely secure. But that's just
we've heard this before
right now on the situation.
We've heard blaming AWS before.
Real quick though, no, because Mario had a good question, and there's a lot of people in the room that want to know, and I want to just add on to this because I have this question too, is because I don't recommend anyone to any centralized exchanges at all. But
I got the balls to do it.
One second. Just add on. So, but what about like services like Cash App, Venmo, PayPal, where you can buy crypto and custody? Are those trusted? I'm really asking. I've never bought them.
They're no different, Ninja.
Yeah, let me try and take it. So and come with something.
By the way, and afterwards, Richard, did you say you can? I'll let Simon go, and then Richard.
Listen, I got the balls to do it.
Sorry, Simon, I'll let you go.
Limit
You guys go.
limit your risk to any of these centralized exchanges by going in with multiple transactions. You send them 1/10 of what you want to put in, you withdraw it. You send them the next 1/10, you withdraw it. You send them the next 1/10, you withdraw it. They can only screw you for the last 1/10. That 10x reduces your risk. Thank you, Richard. You're a genius. True.
No,
It's the
that's
word.
exactly
It's the
what I was
word
saying just
exchange.
before, guys. Is when you deal with exchanges, that means you want to transact. So what I would recommend people is the vast majority of your wealth, and I'm talking about treasury, you want to keep it in a multi-sig or in a decentralized or in your own keys. Okay?
But
So
why?
Let me answer the question.
How are you going to buy the stuff to put in your multi-sig unless you took
I
fiat
know,
from
I
the
know,
real
I
world,
know.
bro?
But then what I'm saying is, when it comes to exchanges, they have a purpose, right? So when it comes to exchanges, as you said, there is off ramp and all that stuff, and on ramp. When it comes to exchanges,
Listen, with all due respect, though, there's a whole bunch of people in the room that then Mario asked like a very valid question.
Let me just answer it. Let me just answer it. Kraken.com, okay? They support anonymity. They have Monero. Still treat them as though they're risky. Do not ever leave money there. You want your money and your crypto to spend the least number of hours possible there. And so when I say you could split your transaction by 10-fold, you could really you could split it up 100-fold if you want and reduce your risk 100-fold. So if you're going from fiat to crypto, spread your transaction. Now just make sure that you don't break the law, because structuring is a money laundering law that you can break. Go Google what structuring is. So if your intent is to stay under some limit to not get caught, that could be illegal. If your intent is that the exchange doesn't screw you, that's probably okay. Check with your lawyer. I'm not a lawyer. So
yeah, again, not financial advice.
let me try and answer the question, because
and then you point your
basically,
fingers towards somewhere, and then if they go bust, then you don't want to be liable. Yeah.
So
well, no, look, I'm here to replace all these guys, but you still have to take your money from your job and get it into crypto somehow. And what are your options? 10% fee at an ATM? Meet some guy in a hallway and he stabs you and takes your money, or take a little bit of risk and send it to Kraken.com. I think that sounds like a better deal. I feel okay with it.
Exactly. Yeah. So let me just try and answer it, because like we've covered it a lot of times, but sometimes people are joining at different stages, so we have to repeat. But the worst place for you to store is an exchange. The reason is a centralized exchange, and the reason is because they have the most attack vectors, and they're there not for custody. They're there because they have to do custody incidentally, but they want you to trade because they make their money through trading fees. And so if they want you to have your money there and you're not trading, it either means that they're doing something with it, or it's just a liability that they don't actually want, but incidentally people start using them for storage. So you should never be storing at an exchange, a centralized exchange is just for trading. If you are going to store with a centralized entity, then you want additional legal protection and a company
just got another report here. Sorry to break in, but this is obviously due to the Gemini thing. It's pretty important. Gemini says experienced Amazon Web Services outage with one of company's primary databases. They have restored the database and are bringing the exchange back up. We will confirm this once we start seeing any exchange movements happen on chain.
Yeah, whenever you start to see an exchange blame that type of thing, that's normally a warning sign. But
another place. I used to send people to Bitstamp because they don't have margin trading, and so they're less likely to FOMO tard and lose all their money, degenerate on margin trading. So like, they're necessary evils.
That's a really good point, Richard. But so the conversation around title and custody is important here, right? So look at FTX. FTX say that you must, when you deposit your funds with us, they're held in custody and then you can trade them. But they also have this margin lending book. So officially, when you margin lending, you're actually taking the coins that you had in custody and then you're lending them to somebody else. So this becomes important because some of the funds were on loan, which means you're investing in an illegal security because you're receiving yield. But the rest of it is just in custody, which means that it's not meant to be touched. But once you actually lend it and then what was the process of FTX in making that distinction? And that's probably where the crux of it comes, because some of it was on their margin book, which is where essentially you gave them permission to take your coins and do something with it if it was on the margin book. But it was meant to be peer-to-peer.
it wasn't meant to be, that they can just take it at will and you know, and borrow it from their hedge fund, their Alameda, their hedge fund. So that's where the illegality comes into it. But in order to, the first thing is that there are custodians which will look after your funds for you, and they're meant to be just set up with all of the security protocols, and they will charge you for custody, because storing people's money is not, if they're doing it for free, it's because they've got an alternative business model where they do something for it. If they're just a genuine custodian, then custody costs money. It's why people hate investing.
Who do you recommend that we could trust as custodians then, Simon?
In this environment, I can't really make an individual recommendation. You just want to go and look at the different custodians. But
I guess what I'm saying is there any trusted custodians? Because to me, the custodians look I get 100% what you're saying, but to me, they look very similar to the exchanges. I mean, we got Coinbase that has custodian, but you're still, like Richard said, you're giving up so much, and you give so much of your privacy up, and so many other things. And like, can we really?
These are different things.
And
so
also,
if you're
one more thing. Also, doesn't this go exactly against what crypto is about?
Yes.
And shouldn't we be teaching more about self-custody than promoting custodians?
You're changing the subject, right? So what I was trying to do is say, you have the exchange, which is the worst place. If you're going to give up your key and get someone else to store it, then you're looking for the legal protection and the security protection of a custodian, and it will cost you money. And it's why people hate gold, because storing gold is expensive and hard to do on your own. And that's the same with custody. So then you look at, well, what self-custody options? The self-custody options, if you've got a small amount of money, you're probably better taking it off an exchange and downloading an app where it's stored to your phone, and then you would have a passphrase. But what you're doing is you're storing the private key on the device, whether it's your computer or it's your phone. But what you ideally want to do is graduate further, which is when you have a special device, which is a hardware wallet. And then if you've got a lot of wealth on the line and you graduate even further, you start to have more complex setups like multi-key setups. So people tend to go down this path and go bit by bit. But what Richard and everyone is saying is, why don't you go just as soon as you've onboarded through an exchange, and then you have crypto, take it out of the exchange and then go straight to the bottom layer is the fastest and most ideal way to do it. But then just remember that you're exchanging one risk for another, which is the question that originally came. What if I don't trust myself to do that? And that's where like hardware wallets try to introduce a bit more of an easier user experience. And everybody can order a hardware wallet and watch a YouTube video on how to actually do that.
But just to summarize something,
Alex,
Simon, can I add something, Mario?
I was going to give you the mic.
Thank you so much.
Please, I was going to give you the mic.
Thank you so much, brother. I mean, if we go all the way back, once upon a time, Mt. Gox, and we end the story with today Genesis, right? There are three things that centralized exchanges and parties have done poorly, right? Number one was security with Mt. Gox. So really, I would evaluate, if you ever want to trust a centralized provider. Obviously, many people are in disagreement with that. But if you're just scared of Web3 and you think you want to find the right person, number one, I would look at their security. MPC technology, multi-party computation, has been the most reputable. If you had to name a custodian out there, Fireblocks have a really clean track record, and they employ that. They don't use your funds. They have insurance. They're backed by legitimate people. But the second part that we've seen in history is obviously integrity. So it's very important to look at the team, look at the regulations that Simon was talking about. And
Sam, the people want to know your thoughts, Sam. Just give 5 minutes to the people, Sam. Come on. But what do you think?
Interesting. I think that the last part was like with that. I agree with what the guy was saying, that you shouldn't be recommending any type of centralized exchange, because it's a centralized exchange. You should be using that as the tool that it is, that allows you to get into crypto, but you don't use a tool like a hammer to hang drywall or put mud on drywall. Like, this is not the right tool to do that. And you use the tool that is a centralized exchange to go from fiat into crypto, but you don't sit there and dwell there, right? You're not just chilling on the plane because it brought you from point A to point B. So you're like, cool, I'm just going to hang out on the plane, right? That doesn't seem like an intelligent idea to do.
People do it to leverage trade, but they won't say it out loud. Like, I guess they don't want to say it out loud. You see, that's what happens. They're like, why do people hang out there? Whether it's 10% of their stack or all of it, they're leverage trading instantly. And they think that they have all this advantage. And
I think it has more to do with the knowledge gap and the idea that being off an exchange is challenging.
You're right. You're right. For the average, I guess the Hex guys get me all like, I'm used to talking to them. But in general, yeah, adopting the crypto right now is just putrid. It's disgusting. And it's because nobody will follow the right path because the media circuit has other plans. They're not going to follow.
And we need more of that education on how to go from fiat to centralized exchange and using that as a pass-through. Centralized exchange, like a better term for that would be like an airplane, right? You don't just stay on the fucking airplane once you land. You get off. And the centralized exchange allows you to go from fiat, then it takes you into crypto, right? So it takes you fly through the air, and then you land over here in crypto land. And then you don't just stay in the airplane once you're in crypto. Seems like a stupid thing to do, right? You leave the airplane. And that's what people should be doing. And that's what we need more education on.
I harp all the time, every single day almost. I've learned everything that I've learned about liquidity providing and price action and the nuts and bolts of liquidity from Richard Hart. Years ago, I learned all this stuff. I just didn't understand really what it meant. But I knew what he was saying. Like, I understood what he was saying. I just didn't know how to apply it yet. So now that I study this all the time, like they were saying, most people don't have time to study all day. Well, newsflash, you'll be way more rich studying all day. And that's if you don't spend a penny.
Sorry, go ahead.
Sam has a good point. We don't use mud to drywall. Maybe it's ancient times, but now we have new tools, meaning technology, that makes things better and easier. Yeah, but it's the understanding. Like, nobody understands why it makes it better or easier, except for us and like a couple cool ass dudes out there that like this stuff, like Richard and like Jack Lev and like Satoshi and all these guys. But like most people don't want to deal with it because frankly, most of the money's not parked in this arena, and it's just a different arena. Why would they be quick if they could clog it up? I would do that if I were them.
And it was kind of interesting to me when they started talking about liquidity providing.
Masterclass by Richard Hart. Masterclass.
Well, because there's so many people who don't understand liquidity providing.
No, everyone.
Correct.
That's fair to say, everyone.
And I'm like listening to those guys, and they don't even understand what liquidity providing is or how.
Not within DeFi now.
But even in this community, you still don't understand.
In this community, there's a lot of people that never really like those guys were like big investor dudes, but like, they don't mess with these lower liquidity assets probably as much. And all our guys do. But the onboarding tool is kind of for like new guys, crypto guys, like, like kind of like a little bit more like corner nuanced market. But at the same time, it's like these markets have a chance. I always tell people these guys have a puncher shot at being the best at something. And it's not always logical. It's not always about the gas fee structure. It's about simplicity a lot of the time. Simplicity is what makes a lot of these things work. And, not having all these loose ends where guys can get in. And that's critical. Like that's what DeFi was made for. So other people can't mess with it. I cannot believe people don't understand liquidity providing, Sam, but I'm telling you, Richard is like preaching these words years ago. He wouldn't even mention it that much because no one even knew what he was speaking about. Like people didn't even know. I kind of picked it up because I just watched everything so many times and for a long time. And now that we study it all the time, yes, I completely understand. But the truth is people don't understand why the number goes up. So they're buying an asset and they really don't understand why the number goes up. And that's what the problem is to me. Like, okay, all the bull ass aside, all you guys can figure out how to buy something on Hex if you really wanted to. But do you know why Hex could or could not succeed? It all comes down to the liquidity pools. And it's good to know. You know how I always say Richard's real good with the liquidity pools and he's a degen super god on the price charts? That's good to have on your team because he clearly knows how to. Remember how I say he supports these things within and like, maybe you can believe he supports it or not, or earns $10,000 on fees a day or not, or whatever. But the truth is, no one even understands enough to do so, other than a couple of these like horrible degen leverage traders that nuke themselves because they have nothing to stand on fundamentally as far as like an ethos for what they're trying to do, other than like fund the Democratic Party and like get on the news and just like sex cults and whatever. Sex cult orgies.
We have a little video that we're going to pull up on Genesis before we wrap things up.
Oh yeah, wow! This was supposed to be the starter. Very interesting how these shows can adjust and change on the fly. It's been an incredible show too, and I'm going to have some closing words before we go, guys. But yeah, she's a lovely lady. We like to see a lady every once in a while because we still don't see them too much on here anymore. And Sam's pansexual, so he only sees, humans, not actual genders. So here, we're going to play this. This is about Genesis. I think this is really important that people understand. And Sam, I want you to touch on this after it's over. This is about Genesis and what kind of funds do they have? You know how Richard was trying to ask those guys in the beginning? Like, he was trying to pick them for Bitcoin information because he knew they might have had some, and they didn't have crap. He was like, is this stuff on market? Is this stuff going to sell? Like, are they going to sell in these liquidity pools? And they were like, what is that? And it's just like, okay, but this is important because we need to know what they hold, because if they're scamming people, they're going to dump. Okay. So that's critical. So let's get liquidity has to come from somewhere.
Richard Hart just joined a completely different Twitter space.
Low class piece of off the screen.
He just joined a different Twitter space. I'm gonna share that now.
All right, cool. Get that filthy blonde off the screen. What is she doing here? I've canceled her twice already. I'm kidding. She's cool. She makes great videos, by the way. Like, and those kind of people really help the cause. Trust me. The prettier blonde girls.
Retarded.
Yeah, but whose fault is that? Is that the SEC's fault because they didn't give clarity?
No. What the fuck does the SEC have to do with the Bahamas, bro?
Well, because like if they would have given people clarity to go ahead and build in the
United States
and not
yeah.
chase everybody
If they would stop creating these regulatory walls to make so the scum will serve. Yeah, true. I wish that they would be better, and then better companies might participate. Yeah, they don't lower their.
You don't think it was a puppet though? Like, can you like? I'm looking at his pictures. Like, I'm looking at his pictures, him and Caroline, and I still can't imagine these two pulling something off like this. I'm not saying, hey, people,
they're gonna get right into the sex cult.
They're innocent. No. All I'm saying is, you don't think there was they weren't puppets and there were people pulling things behind the scenes?
Nah, dude, I don't think so. Look, when you give idiots leverage, they kill themselves every time. So it doesn't matter how smart you are. You have leverage, you're getting blown up. That's how it works. Leverage equals blown up. I don't care who you are, what you think you know, or what advantages you have. Doesn't matter. They had their own coin, their own trading firm, their own fiat on-ramps, their own prop desk. Didn't matter. Liquidated. They had every advantage you could possibly have. Didn't matter.
Why is the media protecting him so hard, though? Because
probably because the media is pro-Democrat and he gave 50+ mil to Democrats, my guess.
I think
maybe it's because Caroline's dad used to be the boss of Gensler. I don't know. So that's what the internet says. I haven't personally fact checked it, but seems like a weird one to make up otherwise.
Who's next? Like Gemini right now is experiencing outages. I hope they're not next, but
I would assume Nexo would be next, probably. Any XO, probably.
You think so?
Well, why not? I mean, what?
Breaking news.
They offer yield. Okay, well, seems like every yield thing's going under. I don't have any other evidence. There's no evidence. You just told me to guess, so there's your guess.
Jesus Christ. What a time. And do you feel like I feel like
I was right about everything. I'm happy. So like go everyone, go lose all your money, help bring the price down. Thanks. Hit my price target. The people that are smart will go get rich in the next bull run. You guys can all watch from the sideline. Go get real jobs, save up your money.
Hey Richard, all these companies offering yield are going under. How's Hex able to hold up with your yield product during these conditions?
Well, I mean, the average stake length in Hex is 7 or 8 years. And so when people lock up, on average, they're locking up for a really long time. And so these relatively short time frame perturbations don't really matter to hardcore hexagons that have 5555 tattoos, which is 15 years. It's 5,555 days. So I bought the world's largest diamond, and it's 555.55 carats. And that's to honor and respect the hexagon cultural heritage. So, like, you know, we also have perfect flawless operation. We also have no employees. So the code just runs. You run it. You are the code. You inflate the supply yourself to generate your own rewards, just like a Bitcoin miner does. Except you don't have to blow up the environment as much to do it. So hex stakers are paid to hold the price up through reducing the supply, through destroying their coins, which we call staking. But really, the coins are destroyed. And then in Bitcoin, you're incentivized with inflation to destroy the environment. And then maybe 2/3 or 3/4 of the people destroy the environment less because they use renewable. And then, you know, hopefully that using of the renewable doesn't starve it from other industries that would have used it and now has to use, you know, crappier electricity. It's just stupid. Like, we know proof of stake works. So why are we blowing up the environment? No particularly good reason.
Why is there so much pushback on Hex, Rich? What's the agenda?
Well, people are mad. They're mad that they missed the 10,000x returns. They're mad that everything else failed all around us while we have perfect, flawless operation for 3 years. They're mad that I founded it and I'm a better human being than they are. And I own more stuff than they do and torque better than they do and do better pull tricks than they do and raise more money for charity, $27 million for charity raised, and write more free self-help books, t.me/scivive, and predict the prices better and predict the failures better. Like, I'm just a better human being in every single way compared to anyone else in cryptocurrency. I'm the best human being in this industry.
I could crush him on a poll.
You're gonna mention CZ?
100%.
CZ, the 100x leverage CZ? The guy that got for 50 million, that one? No, he's not as good as me. How much he raised for charity? Not 27 million? Okay. I win. Who's next? I'm the best human being in this industry, and I have the best product, and we're winning. So eventually people will get it.
Speaking of
I bet your farts smell like roses too.
Nah, my farts smell nasty, dude. You should come smell one. I'll send you one in a bottle if you give me your address.
Well, you guys can talk about that later. CZ trying to acquire during that time of the beginning of the collapse. CZ saying or tweeting out that he was going to, after doing his due diligence, going to take on FTX.
Tell him to go buy all the Grayscale, 50% off Grayscale Bitcoin. Go ahead, CZ. You got big pockets, bro.
But you don't think I had an intention to buy it, though?
I mean, I don't really care. Like, I don't care whether CZ buys out someone else's bad debt or not. What do I care? I prefer to get a better deal. I prefer everyone sell the bottom. I prefer the U.S. government sell the bottom. I prefer China sell the bottom. I prefer everyone get liquidated at the bottom. Sell the bottom, all you idiots that couldn't listen. Get bye-bye. Bye-bye. You don't get to be on the next bull run. Okay. But the winners, we get to be.
And the next bull run, what are your predictions?
I think Bitcoin's going to be pretty limp. I mean, maybe you get 100K out of it. Maybe get another 3X. Cool. I think Ethereum's going to flip it. So, I don't know. Maybe from the bottom, you could get another 50, 60X, maybe. And then something like Hex. Look, I'm not a financial advisor. I don't, these are just guesses I'm pulling in my butt. But historically, my guesses have been pretty sick. You know, I think Hex is going to outperform by leaps and bounds everything else because it's just so much easier to go up. So, you know, you take $100 million, you buy Hex, the price goes up many multiples. Ethereum doesn't go up any multiple. Bitcoin doesn't go up any multiple. They're just too heavy. You get too many users. It's got too much liquidity. So liquidity is the enemy on the top side. On the sell side, liquidity is the friend on the bid side.
I'll let the audience ask questions. Go for it, Maddie, if you had a question, Steven or James.
Yeah, why are you guys spreading the FUD? I mean, Gemini's out there saying they had a server error. Is every server error now a liquidity issue?
I mean, so I'll give you some counter FUD. I think the guys most terrified of being fractionally reserved are guys with bit licenses. And Gemini has a bit license. But I also personally know people that can't get their money off Gemini. So on the one hand, sure, they're probably under the most strict regulatory regime in the entire universe. But on the other hand, who cares? I know people that can't get their money off. So now what? You know what I'm saying?
How long have they been trying to get their money off?
A few months.
Well, forget about that. I have.
Well,
there's
if you can
people
bring one up,
today-
I'd like to speak with them because I've had withdrawals from Gemini within the last
cool.
few months. Never had an issue with them.
Yeah. Well, hey, man, that anecdote's really strong.
Well, Maddie,
That
if you didn't see
sample
it,
size
I
of
posted
one.
top of you from the official account. They're experiencing Amazon Web Services issues. So,
Well, let me put it this way.
Yeah, that's a site outage. That's not a liquidity
but
issue. You guys are
no,
here
hold
out here
on,
like
nobody
the
can pull out
platform's
their
about
money
to go
though.
down.
I have
Nano-
absolutely no evidence that Gemini has
Hold on.
any liquidity issues at all.
Hold on.
None.
What does it say? Gemini experiencing outages.
The website is, yeah, it's an Amazon
Okay, so
service,
that's the
web
title.
hosting.
Maddie, that's the title.
Yeah, I don't know what you're. I don't remember hearing anyone on here say that Gemini had liquidity problems. I didn't hear anyone here say that. I didn't say it. I don't know anyone. I didn't hear anyone say it. I think only you said it. Maybe you should stop fudding.
Oh, maybe I should then. I'm sorry if I misheard you. That's
Yeah,
my fault.
it's all good.
I don't think anybody in this room ever said Gemini.
But let me ask you a
We
question.
hope Gemini don't.
Why on
I
earth would
hope
you
Gemini
take the
doesn't host.
chance? Why on earth would you take the chance? They promoted a failed product to their users. They promoted something to their users that just got their users wrecked. Their users can't withdraw from their partner in the earn program. So they fucked their users. So why would you take a chance? Why would you risk your stack to find out? Remove your money. It's that easy.
Well, I know plenty of people who got burned on Hex as well, my friend. So maybe you should tread
Yeah,
lightly
but there's
there.
shit you can't. Price volatility is not something you can program out of a speculative instrument. I know people that got wrecked on Facebook. I got people that got wrecked on Amazon. Speculative instruments have price volatility. You can't program that away. 100% perfect flawless operation with 100% uptime is what Hex has. And guess what? It's not what Gemini has. We're at 100% uptime. Gemini isn't. Our shit works perfectly for 3 years and no one else's does.
Well,
It's
Gemini
indisputable.
has segregated client accounts, and that's enforced by the tightest regulation in the world.
Yes, yes, I know, but you're repeating me to me. The bit license is very strict. I know, which is why so
And-
few companies have them.
Right. So one thing that
Do you
I've been
have
wondering
stock
about
in
Hex
Gemini or
for-
some shit, or did you suck the Wicklevi off in your weekends, or like what's the deal? Why do you like these guys so much?
First
They're
of
just
all,
another
watch your-
shit
watch-
exchange with
watch-
no
please
liquidity.
watch your language.
No,
That's
fuck
not-
you. I'll
that's not-
use whatever
that's
language I
uncalled for.
want. Suck my balls, kid. I'm an adult. I'll speak however I like.
You're speaking like a
Who do you
scam
think
artist.
you are? Who do you think you are to control my language?
All right. So let me explain something about Hex for all that are listening, because people are already DMing me going, "Who is this Richard Hart fuck?" It's very simple. Hex is a Ponzi scheme. It's very clear and blatant Ponzi scheme. They've basically advertised outrageous percentage gains promised to their users without any sort of disclaimer.
That's completely false. That's completely false, guys. Don't listen to
I've
this
seen
guy.
them, dude.
Don't
Don't
listen to
fucking
this guy.
lie.
Don't listen to this guy.
Don't fucking lie,
are you
dude. I've
serious?
seen
Are
them
you serious?
on Black Cads in London, dude, with my own eyes.
Every single user that uses its own seed phrase interacts with a contract that no one owns, no admin keys, and we generate our own yield off of.
I'm talking about the advertisement. Gains promised to users. This is a red flag.
Please be quiet.
You cannot promise 5,000% gains to a user.
They're not promising
that's a
5,000
scam.
gains.
I've seen it. Don't fucking lie to me. I've seen it with my own eyes.
Stop.
Advertisements that say buy Hex and get 5,000% gains on Black Cads in London.
Hey, one at a time. One at a time. One at a time. This is not the Royal Rumble, man.
No, but
There's
I'm
no
like,
utility.
Hey,
this
can I tell you what the Black Cabs
No, let me
say?
speak for 10 seconds and then you can say whatever the fuck you want, because you're a dirty fucking mouth already.
You're lying.
Really?
You can calculate your own APY dependent on how many people or supply is dependent on how much their supply currently. So
Ponzi-nomics, dude. Ponzi-nomics. You use money from the new people to pay off the old people. That's how Ponzi's work, asshole.
Money from everyone else. Then you have to call Bitcoin a Ponzi. You have to call your housing market a Ponzi.
No. Bitcoin is an asset.
All right. I invited Richard here to go ahead and speak about the markets. Richard, go ahead and take the mic, and then Maddie, if you want to have a rebuttal, go for it. There's not, again, I'm not, Roman Reigns and John Cena is not here. I'm gonna let everybody talk, but we're not doing this Royal Rumble shit.
Yes, quite simply, if I remember, and it is on the homepage of hex.com, there were advertisements on taxi cabs in London that said Hex is up, I think it was 1,100% or 11,000%. And you want to know what happened after those ads? The price went up another 100x. So this guy flapping his lips here about how unrealistic the ads were and how wrong the ads were is wildly wrong based on math. Hex went up 1,000,000%. 1,000,000%, not including its staking rewards. And do you know where all that money came from? Do you know where all that profit came from? The same place Bitcoin miners' profit came from, inflation. Bitcoin miners inflate the supply to blow up the environment. Hex stakers inflate the supply to support the price. It's just Bitcoin with a proof of work change. It has a very low inflation rate. It has a maximum 3.69% inflation rate, whereas Bitcoin had a 3.89% inflation rate on its way to $20,000. And it was exponentially higher in the past. As a matter of fact, many people don't know this, the best time to buy Bitcoin was when Satoshi owned 100% of the supply, when it was called a scam by everyone, when there was no liquidity, where there was no place to buy it, and when the inflation rate was the highest. It had a 10,000% annualized inflation rate very early on, because that's what happens when you go from no coins to 50 coins, to 100 coins, to 150 to 200. There used to be 50 Bitcoin block rewards back then, back when I used to mine it when it was 50 cents and it was free. As a matter of fact, it was so free, you didn't even have to include a transaction fee. People would just include your transactions for free. No one cared. Didn't even have a price back then. So I invented something that we need in cryptocurrency, which is time deposits. Bitcoin tried to be a currency, failed. Hex tries to be a time deposit, but it's not like a real time deposit. A real time deposit doesn't pay you more when other people end stake. A time deposit doesn't pay you more when other people lie about their stake and end it before they should have. But in this system, it does. And by the way, when people complain about 40% APY gains, guess what? That's the APY in Hex. The actual APY was millions of percent because it was 1,000,000% USD gain times your APY. So when I hear people complain about the 40% APY, I think it's really funny because depending on how long you staked and when you get in and when you get out, it could have been 1.5 million%. So all it is Bitcoin with a proof of work change. It's been operating flawlessly for 3 years. It has less negative externalities. It was given away for free to Bitcoin holders. And while everything else has failed all around us, it's operated perfectly, flawlessly, wonderfully. And guess what? These type of gains, these, insane gains, they're very similar to what Bitcoin did. They're very similar to what Ethereum did. They're very similar to what BNB did. They're very similar to what Dogecoin did. They're very similar to what Litecoin did. These types of gains and performance we've seen over and over and over again. And guess what? They don't need to be Ponzi's. For a Ponzi to exist, you have to have a middleman that controls who gets paid. He makes a promise that he's going to pay you based on a profitable business, and he lies. He doesn't have a profitable business. And so what he does is he takes money from new guys and gives it to old guys. In Hex, it's the opposite. In Hex, when you mint your inflation, you're just minting stuff that's not money. And it's only money if you use the fruits of your own labor to generate something, to offer for sale on the market, to dilute all the other things that previously existed. It's just like mining Bitcoin. So I don't understand the claim to Ponzi. I don't understand the claim to bubble. We're still up 60,000%. Yes, we're down 95%, but still up 60,000%. Because when you go up 10,000x, going down 20x, which is a 95% drop, doesn't cancel the 10,000x. And so I invented the thing that we need in finance to monetize time, the thing that puts people in control of their own keys, the thing that removes counterparty risk, the thing where you mint your own rewards, you hold your own keys. There are no middlemen. No one can screw rewards. And then people yell at me. And I think it's hilarious.
I only yelled at you because you used some very foul language. I'm sorry.
It's not foul. It's fun. You just need to upgrade your adultness.
No, telling somebody to suck off somebody else it's not funny. It's just you trying to get under my skin on purpose.
I've watched a lot of comedy shows, and I'm telling you, it is funny.
My turn for rebuttal. I was very quiet while you spoke. Please. As a licensed portfolio manager, somebody who's holding a SISEC advanced examination, which allows me to trade clients' funds. Basically, you need to use a disclaimer. When you have a advertisement that says how much gains were gained in the past, it says past performance.
It's literally written on the advertisement. That is literally written in the advertisement.
I've
is
seen
literally.
several. You keep interrupting me. That's not okay. I sat there for 3 minutes and listened to your BS.
No,
My
but
turn
it's
to speak.
on hex.com. I can see the disclaimer. I've seen the
David,
ad.
please.
It says past performance is no indicator of future performance, and you could lose all your money or something to that.
You are a
effect.
liar. You are a liar because your website never said this. I went through your website up and down, did not see a single disclaimer. I went through the advertisements in The Economist and on the taxi cab. There was no disclaimer.
The Economist ads were there too, bro.
But you know what? I'm not.
You're lying.
I'm not
bro.
here to disclaimer. Okay. I want to compare yourself to Bitcoin. I could take a Bitcoin and send it to anyone, anywhere in the world. They can accept it and easily transfer it into money. Not the same with Hex. You know what?
Oh yeah, really? You're lying again. You turn it into Ethereum on Uniswap with no middlemen.
Yo, what are you talking about? It's actually more trustless because Bitcoin, the only way you could do it is someone else has to buy it on the other side because Bitcoin actually doesn't even have the same liquidity. If you want to sell your money right now, you could go without no one else telling you what to do and you get it. There's liquidity pools for that on Uniswap, all these things. What are you talking about, bro?
Yeah,
First of
and
all,
no disclaimer thing just drives me wild because I give the most disclaimers. I'm the guy that tells you all crypto drops 85%. I'm the guy that tells you that it could go to zero. You literally click the disclaimer on the site. It says you're lucky
Look,
to
I
stuff
have better
where it's
things
wrong.
to do than argue with scammers all day. Everybody in this room understand that this is a Ponzi scheme.
Dude, we don't have. Dude,
all right,
we
have a good day. Bye bye.
We have no liability to actually like. What are you talking about? This guy said that someone went and said his opinion. Said Hex is up this. It's actual facts. You can go check on the chart. He's not lying. He's saying it. Hex.com didn't put that. We did that. We did the NASCAR. We did everything. Richard himself went and got the diamond, which got, by the way, good job, Richard. $4.2 million for International Press Forever. Good job. People actually downplay that like crazy. And then this guy comes, oh, can't put that. You have to put a disclaimer. How do you? Why should an individual, off their opinion, put a disclaimer when they have no ties to the what?
Yeah, but
company?
there's disclaimers all over the place anyway. The site is riddled with disclaimers.
Like please, like I'm sorry to interrupt, but like this, it doesn't make sense. It really, I'm fed up with this.
No,
like,
I think he was a little bit mad because he came up here and he started accusing people of saying that we said that what you call it, Gemini's going down. No, it's just like they're experiencing outages. It's the truth. They sent out the letters
100%.
themselves.
100%.
Nobody
Right.
said that.
I bet you that guy just got wrecked on FTX, bro. He's super tilted.
It's Max Payne. They haven't gone through it yet. It's Max Payne.
It seems to me he came
Hey,
up
Richard.
here making a bad faith argument, a straw man argument essentially about Gemini, and went right into other straw man arguments against Hex. Anyway, Richard, what is, if you had to pick one thing that people misunderstand about Hex the most, that you would like to address, what would that be?
Oh, dude, we get these all the time. People hear the 7-year lock and they're like, "What's going to happen in 7 years, bro?" And you're like, "Well, during that time after now, people keep staking, and actually, from our analysis, they keep staking longer and longer." I used to brag about when it was 4 years. Now I'm bragging about it being 7 and 8 years. The average stake length seems to keep going up. The share price keeps going up. It's amazing. Like it's. But they don't get it. They understand it backwards. He just said it's harder to like divest from. There's nothing easier to divest from without changing chains, without using bridges, without using middlemen. You can de-risk from Hex into USDC or DAI or TUSD or USDT or whatever you want with no counterparty risk, no middlemen on the most liquid market for the product with the absolute minimum counterparty risk possible. And the least spoofing and the least fees. Like, it's just amazing. And then he literally says the opposite to my face in all seriousness. He's like, "You can't sell it, bro." You're like, "Really? That's funny. How do you think the price got down 95%? People selling it." Like, how do you think people bought all these Lambos? People selling it. Like the things this person says don't make any sense in the real world. You can go to the website and read all the disclaimers now. It's covered in disclaimers. You can go click the taxi ad and read the disclaimer.
There's actually a newspaper that was pulled up just now, and there is a disclaimer that says values go up and down often. Past performance doesn't guarantee future performance. Your capital is at risk. Unregulated product with no investor protections.
Thank you. Yes, that sounds like the disclaimer from the Economist ad. So I just, when a person comes up so mad and says everything the opposite of what is true, it drives me wild. Drives me wild. It's crazy to me. I don't get it. because it's so easy to disprove. You say it doesn't have a disclaimer. I got the picture on the site. Go click the disclaimer link at the bottom of the page. It says you're lucky this stuff works at all. It can go to 0. Solar flare can knock it all down. Block software is hard. Blockchain software is harder. Like you can't get more disclaimers. I'm the guy that tells you crypto drops 85% all the time. Anybody else tell you that? No, it's me. So like, it's tragic. You know, maybe he'll just lose all his money and sell the bottom. I'll be all right with that. But unfortunately, because he's a registered financial loser, he's going to lose other people's monies too. He probably already has. Guess what? I'm not a registered financial anything, and I haven't lost anybody's money. So go me. Hey, you want to know how much hurt I got in these exchange things? I have no money in FTX. I have no money in BlockFi. I have no money in Celsius. Go me. It's hilarious to me, dude.
Anybody has a normal question for Richard?
Yeah, Richard. As an OG in this space, one of the theories was over time Bitcoin would reduce, right? So we had a 95% drawdown first cycle, 85 the second. We're at 79 right now. And the last cycle we had major pumps, right? 7 to 14K, 100% pumps. This one we had a pretty weak one from 35 to 50, which represents 50% pump. So just wondering, what are your thoughts on volatility decreasing over time?
Yeah, it's limp dick dead weak gains forever now. Everybody already knows about it. You're the last guy in. You ain't new. You're not an early adopter. It's 13 years old. Bitcoin's never going to have mad gains again. Never, 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 never. And by the way, you know who you're making rich? The bankers, the venture capitalists, the governments. You're not making the people rich. You know who doesn't have much hex? Venture capitalists, governments, Bitfinex hackers, Silk Road hackers, Plus token China seizure. Nope, they ain't got no hex. And they probably don't have any pulse chain. So it's like we're winning the game in every way the game can be won. Bitcoin dropped 75, more now. You told me 79. Cool. Ethereum dropped 85. Maybe it's more now, but it's probably still 85. And then Hex dropped 95, but it's been paying interest the whole time. Awesome. It's great. Couldn't be happier. Well, I could be happier when my price targets get hit.
Trillion X, what's going on? My question.
Hey, brother. Yeah, I just want to say, like, straw men are bad, but middlemen are worse. And that's exactly the example you're seeing here, because their products are shot. Let's ask him how much money he made for his investors, because guess what? They don't get paid on performance. They get paid on their assets under management. So
hey, Bullish, I don't know if you switched your screen.
You don't need any of these middlemen. You could do this yourself. Cut them out of the loop and keep the money for yourself.
My bad. I just didn't know if you noticed.
Of course, they're going to have a problem with that. I don't see how nobody else sees it. Guys, this is the middlemen revolt.
They don't realize
those guys. They haven't done shit for us, and their products are lame. And now it's a different time. You can do this stuff all on your own. You don't need that anymore. So yeah, they're going to say every nasty imaginable thing they can about their competition. That's all it is.
Yeah, like we are the shining city on the hill. All of our trading is on chain. All of our liquidity is on chain. The history of everybody's trades on chain. Uptime, 100%. Multiple front ends, multiple like teams that built them. Totally decentralized. Totally.
You want
so
you want disclosure? Sorry, Richard.
Go ahead.
This whole thing is coming down to disclosure, guys. Nothing on the blockchain has the type of disclosure standards that heck you can literally go and look at every transaction, who's doing it, wallet to wallet, trace it through. You know what they asked CZ Binance about this the other day? They said if decentralized exchanges have this great innovation where you can audit, you can go through, it's all traceable. Why don't you do that in Binance? And he made this argument against privacy. It's a privacy concern for him, right? So he wants to know everything that you're doing. We're going to find out that I'm sure they were front running their own customers. I'm sure they were selling order flow, the exact same MO that Robinhood had. We're going to find all this stuff out because guess whose privacy they're not concerned about? Yours.
Yeah, I agree. It's just so weird to me. Like we do everything better, and then everyone says the literal opposite to me, and it makes me sad. It's like, oh, Richard, you've got volatility in your thing. Yeah, mostly volatile to the upside. So like, yeah, people prefer that. Anyway, I got to go, man. I'll see you later, guys.
Richard, I appreciate it.
Thanks, Richard.
Man. Thanks for coming on. Yeah, I don't know what the fuck broke out here while we are on here. I brought Richard here to go ahead and talk about the markets.
We'll give it just a minute.
No, I'm
Maddie.
sorry, David. The guy was talking so many lies. You know what I mean, man? It's not fair when people completely have no clue what they're talking about. And
No.
when it comes to that, it's like, I'm sorry. I'm very sorry
No,
for
I get
outraging,
it.
but like I'm
I
fed up
get
with
it.
Richard always defending himself. It's like, why is it that people just are so uninformed? You know what I mean? So I think the question is that if people would understand us better, look into it, DYOR better into what actually Hex does and provides, they get jealous and mad hurt because they're not in it. So yeah, I think the focus is on what's happening with the market and how can what's the solution? The solution is taking hold of the power of what we need, right? Bitcoin allows you to do that, but sadly, at this moment in time, because of that own, a chance to become 51%, they figured out a way to take it, and Hex has figured out a way for us to not have to worry about that. Yeah, I would really suggest you look into it, man. It's really wonderful. It's really wonderful.
And David, I want to give you props real quick. I know James, bro, just real quick. I want to give you props, bro, because look, you can see this contrast between even what you're trying to do and what Mario's room is doing, right? Like you can see it in the viewers, you can see it in the listeners. What's the difference between what you're doing and Mario?
Well, I don't. This question keeps on popping up for the last 2 to 3 days, and I'm trying to be humble and say that I give everybody. Well, G Media in general gives everybody an opportunity to speak. I'm invested into Hex, but
you're not shilling for pay.
Nah, I'm not. I don't do that.
See, that's the difference. But you see how the energy completely changes. Like this is how you know that something's up. You know, like you get 30,000 people. They're paying people to get on there and give them information. They said it themselves that they'll have one guest on if they could bring on somebody else. You start to get this whole chain of bullshit. And when you do it organically, okay, it's a little bit slower, but bro, you're gonna blast off, man. I just want to give you props and thank you, bro.
Wow. Wow. How's everyone doing in the chat? Richard's gone. I want to see biceps in the chat if you're still in here. Biceps in the chat if you're still learning and you're still in here. I want to know who's in here. Famous did such a good job. Richard did such a good job. Richard's in prime time, our age, full engaged, full biceps. Incredible. Incredible. You know what I mean? So we're stoked on that. How's everyone doing? Okay, here we go. Dr. V-Ray. What's up, Dr. V-Ray? Top GRC, support my brother. Let me see those diamond hands locked in. Thank you for the information and wisdom. Appreciate you, brother. Thank you so much, Dr. V-Ray. I really appreciate that. Means a lot. All the biceps in the chat, guys. That was phenomenal. We're back on. We're live. Hex is back. Some of the streamers never give up. I don't want to give up. I never gave up. People wanted me to stop talking about Hex. No. I like Hex fundamentally. I like what Richard's brought to this world. I love what he's taught the people that are willing to listen, which is very few, about Uniswap liquidity providing over the years. And it's just to watch him do that and say all that stuff about liquidity providing in front of all those big heads, man, that makes your boy happy. Man, that makes your boy real happy. Do you feel me? Cool hair today. Thanks. I didn't check it. I just try to make it not look redonkulous. This is incredible. Proud of our age, proud of everyone. Amazing good times in the DeFi ecosystem during a brutal bear market, guys. Let's check out nomics.com real quick. And I just want to do a quick rundown of what I'm seeing. Richard gave us a lot of alpha, guys, and I want to be really clear. I'm absolutely stoked on it all. So let's check this out real quick. As you can see at the top, there is a PP token, 69-day claim phase, free money for nothing, PP token, blame. Look at all this stuff, guys. That's pretty cool. Oh, let's scroll down. So what we were discussing today, hey, Bullish, is there any way you could still play that video before we close out with the girl? I'm sorry.
Yeah, give me a second. I'm gonna pull it up.
You're good. I want to show people this anyway. So if you could see here, guys, we have Big Daddy Bitcoin up here, big sack load of liquidity, a big sack load of limp D gains, and that's critical to understand. So Ethereum here still holding up great, but broke some resistance today, guys. Not super stoked on that. Still think we have major downside. Whether it's short-term or long-term, I don't know. But I mean, I would buy Ethereum and not be too worried about it, but like downside legit. USDC is critical right now. Binance coin 272, holding strong as always. Binance coin hovering from 250 to 380 like it's nothing in a brutal bear market. But who knows what's going to happen with CZ and Binance. I guess we're just going to pray that he's not in on the propaganda as much as he could be. I'm losing some of our coins in here. Where's our coins? We got Hex down 3%, kind of sticking with everything else, holding strong at that 90% point. We like to see that. Cool. You know, like I think we're all waiting for that GBTC premium to close up. That's what Richard's been talking about. And that's what this nice young lady will be talking about. She's going to be talking about what's going on. This was what we were supposed to play in the beginning. And then Richard went full God mode on the internet. So let's play this. And then I'll say one more word before we get off. So let's play that.
Also, we have some more fallout, more evidence of a mess from the FTX debacle coming from Genesis. This is an institutional platform. Basically,
did I lose
lending
her?
platform, trading platform for institutional buyers.
God does not want us to play this today.
Investors and traders. They're dealing with billions of dollars of cryptocurrencies. Also, they are heavily, invested in, or they have in their custody ETH or GBTC. Each of these products are products from Grayscale. Grayscale is obviously, GBTC was designed to facilitate institutional investors to get exposure to the price of Bitcoin. But now Genesis has put out a call. They're going to do a meeting for all of the holders, all the users of Genesis, to try to let them know what's happening. This isn't a good sign typically. People think that they are having liquidity issues, solvency issues. And if that's the case, an option for Genesis is to actually dissolve their holdings in ETH and GBTC. But you're thinking, well, how can they do that? They're not Grayscale. They're not Grayscale, but there's this umbrella company I mentioned before called the Digital Currency Group. They own platforms like Genesis, like Grayscale, like CoinDesk, and a lot of different other very popular, well-known businesses in cryptocurrencies. A lot of them are in this umbrella. And so because Genesis is in the same umbrella of the DCG as Grayscale, the Digital Currency Group could decide, you know what, it's in our best interest because this one is failing, that we're going to dissolve this so that they can make their lenders whole. So interesting to see what's going to happen. Is this the last of the shakeout of this bear market? Is this the last of the cleansing that this space really needs? I really hope so. Next up today, another video is going to be coming out giving you updates on FTX. What's happening with SBF is.
So there's a little update, guys. We could have some GBTC and Ethereum dumped on the market. Be prepared for everything, guys. Be prepared. And if you can watch those spaces, not from the one that we just watched with Goldstein, but the recorded from the one before that, which we started right at the beginning of the show. Richard really went into liquidity providing just the way I like it, baby. And I've been preaching that to the choir, and I feel like there's no one else to preach it. And I'm so glad he taught some people that so people can learn, because they don't listen to me as much as they listen to him. So I want him to teach it. He taught me. I'm just reiterating a lot of the stuff that he taught me, because really you'll find that there's not many people, if like just a handful, that really truthfully understand these liquidity pools within the real DeFi ecosystem. And Richard Hart is one of the guys, not only that understands it, but one of the only guys that will talk about it, because most people will not give those dirty little secrets away. Guys, what an incredible day. I'm having a blast. Have an amazing day. Crypto in the Morning live every single day at 11 a.m. Eastern. Protect yourself. Stay off centralized exchanges, not your keys, not your coins, guys. Crypto in the Morning every single day.
You already know what time it is. Crypto in the morning. Crypto in the morning. Crypto in the morning. Waiting on phone. Crypto in the morning. 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 Waiting on phone. Crypto in the morning. Crypto in the morning. Smoking no blunt on my way to the gym. 11 a.m. I'm already tuned in. Got me some hacks and I'm making a stake. Got me some hedron, I'm making it rain. Pay me some maxi and that's just in case. Jim Reddit sent me to show you the way.